really need to talk to a financial service professional and have somebody
Absolutely.
explain it. So just explain the differences between term and permanent.
Yep.
And
So when it comes to life insurance, it's a unique financial vehicle,
right,
right? So when we're talking term versus permanent, that truly matters, right? So those are two, I call it categories,
hmm,
right? You got the term category and the permanent category, and then you have just different types that fall under those categories.
right,
So let's start with term. Term, probably most people have that,
exactly,
right? When you have insurance through your employer, it's likely a term policy that's offered through the employer.
hmm,
Once you leave that employer, it goes away. It doesn't
right,
come with you. Sometimes you'll receive an email or a phone call from the actual insurance company that would try to then solicit some business. Like, hey, if you want to keep the insurance, you can. You just have to go through this underwriting process, right?
right,
But term insurance, it's to put it in its simplest form, it's like renting, right? A
right,
home,
hmm,
right? So it isn't permanent,
right,
right? It has an expiration, right? And it can be a defined number of years or it can be to a particular age,
right,
right? And because of that, most people outlive their term policies,
right,
right? If you check the stats, I think it's somewhere like term policies pay like 3 or 4% or something like they pay out
right,
3 or 4% of policies of term policies pay out,
right,
and that's because most people outlive the policy,
hmm,
and because of that, life insurance companies don't see a huge risk, so they allow people to get a large death benefit for a relatively affordable cost,
right,
right? So term insurance, very pivotal, right? Everyone should, like, again, I agree. So everyone should have some type of insurance, have something,
right,
especially in the black community, have something. But term insurance is, if you just need something quick and you need something affordable, that's
hmm,
usually the route to go. Now, when it comes to what's the proper amount,
right,
there's different ways to run an assessment. Most people will just factor in all of their debt, right? I got a mortgage, I have loans, I have this, right? And they add that up to come up with a number,
right,
right? And they choose that. The route that my team and I use is we just have you max out the most that you qualify for,
hmm,
right? We're gonna see how old are you, what's your income. Okay, this is the most that you can get. So
yeah,
we just start from the top and then we right size it from there. Now, when it comes to permanent insurance,
right,
now permanent insurance, it has a lot of different types under that category,
hmm,
right? You got universal, you have whole life, you have variable, you have index,
hmm,
right? Universal. So you have all these different types. And, when we're having a discussion, when we're describing it, I'm gonna just talk about permanent whole life,
hmm,
because it's a lot of opinions
right,
about permanent whole life, and permanent whole life is probably one of the best kept secrets as far as integrating that into your overall portfolio, right? So permanent whole life, what it does is as you're making these payments into the policy, you're actually building up equity within that policy. So if term is renting the home,
right,
permanent whole life is now owning the home.
right,
Same concept. You have a mortgage on the home. As you pay down that mortgage, the equity in your home increases. Same concept with the permanent whole life. As you make these payments, the cost of insurance is decreasing, and that is increasing the equity in the policy. So, you're growing this cash within that policy, and then it just becomes an asset, right? That you can access anytime you want to. There's no age restrictions. There's no penalties and fees and things like. Well, I guess it depends on which company you go through.
right. We're gonna talk about that a little later.
Right, right. But it becomes an asset over time, and my philosophy is everyone should have permanent coverage on their life, because permanent is what it is. It's permanent. It's going to be there when it's needed, right? One thing that's certain for sure is that we're all going to expire,
Right,
right? And when we expire, we need to have that permanent insurance in place that can take care of any final expenses, funeral expenses, leaving a legacy, whatever the case may be. Term, unfortunately, because it expires, if you live to 90, you ain't gonna have a term policy,
Right.
right? So you have to have, so my philosophy is, having that permanent on the books is very necessary. But when we're talking about strategically designing it and using it, and structuring it or fitting it into an overall portfolio, we can get really creative with it.
Yeah. I don't have permanent life insurance, and one of the reasons we were talking about it, and one thing you educated me on was the difference between a stockholder company, and a mutual company. So educate people on the differences between that, because
Yeah.
that can change a lot. So when I did my research and I'm looking at a lot of these policies, I'm looking at a lot of companies that are stockholder companies, and I'm like, it's not a good idea. Like I'm just not buying into it. Thank you for watching. If you would like to see the full video, please subscribe to the YouTube channel at James Hill TV.